Wednesday, August 1st, 2018, Monaco 64, home of alternative economics and contrarian views. This morning I want to talk about the yen carry trade. I've spoken about this many times over the years. Recently I've spoken about how things are in the summer doldrums, but the last couple of days, yesterday and today, we're starting to see some moves that could be an early warning signal or a canary in the coal mine, so to speak, for all the financial markets. I've spoken a lot about the Japanese yen carry trade, and before I look into that closely and what's happened recently, I'll look at the markets. Yesterday, the stock markets finished up about just under 0.5%. NASDAQ finished up above 0.5%. They came off from the highs, though intraday they actually reacted well after the close. They traded higher after Apple results. But this morning it's been an overnight. It's been a little more volatile. So it's just before 9 a.m. London. Spot gold still stuck around 12, let's say 15 to 12.30. Yesterday we had a fairly wide range compared to the previous days. We went down as far as 12.13, then spiked back higher almost to 12.30. This morning we are at 12.20.66 as I speak, down $3. The low's been 12.20 and the high 12.25. Silver's down 8 at 15.43. Range has been 15.42 to 15.56. The Dow around the key resistance level that I've spoken about is around 25,410 right now. It's down 7. It's been as low as 25,353. So it has been down. It was down on the open of the futures after 6 p.m. New York. S&P is unchanged, 2816. The NASDAQ is 72.49. NASDAQ future up 17. Has been as high as 72.89 and as low as 72.33. Currencies are fairly stable. The sterling and the euro. Sterling is down 7 pips, 131.16. The low's been 130.94. Euro is below 117 at the moment. It's 116.88. Pretty much unchanged from overnight closes. The dollar yen, that's an interesting one. The dollar's fairly strong right now. It's up 0.25% at 112.13. It has been down though as far as 111.69. We need to see maybe a weaker dollar against the yen, and we could see that going forward, and I'll explain why in a minute. What else? Crude oil has come off. We almost got up to 70. Now we're back down to around 67.80, down 2/3%. We had the JGB, the Bank of Japan meeting yesterday. They announced that they're gonna try to have their cake and eat it. They're gonna keep an eye on yields. If it goes, keep it low, and if it goes high, they'll try to keep it down. But the market seems to be a little bit uncertain now. Zero Hedge says Japan, China, markets turmoiling. They talk about how the JGB yield spiked quite a bit today. They say as the first full trading day since the BOJ shifted policy ever so gently, Japanese bond yields have blown out, spiking 11 basis points. At the same time, Chinese stocks and the yuan are sliding on the heels of Trump's tariff escalation. Yeah, that's something else that's going on, the tariff escalation. I think yesterday there was talk that the Chinese and the Americans were sorting things out. Today there's talk that Trump is going to increase tariffs even more, the percentage charged on the tariffs. So this is what Zero Hedge says. The market is more likely to test an upside to bond yields sooner or later, given the BOJ allows wider deviations in the 10-year yield, and the yen will probably strengthen during the process, Kato said. The policy tweaks points to a distant future exit and thus is a catalyst for yen strength in the medium to longer term. So yeah, the market is worried that there's going to be yen strength, and the yen carry trade, as it says here, a yen carry trade is when investors borrow in a low-yielding currency such as the yen or the euro to fund investments in higher-yielding assets elsewhere. And this yen carry trade has been going on for almost, you could argue, decades, because the Bank of Japan has been trying to cheapen the currency always and keep rates really low. And what that does is that gives investors, speculators, the green light to borrow in yen. And when you borrow in yen, for example, you sell the yen against higher yielding currencies like the dollar. So the yen goes down, and then you borrow, and then you borrow the yen, right, which is zero, and you go and buy higher yielding assets in dollars and pounds and other currencies, and that keeps financial markets elevated. It gives them liquidity. It's what's helped the Fed perform its rate hikes since the end of 2015. It's helped the Fed kind of take the punch bowl out of the punch out of the punch bowl, because the Japanese have come in and been able to keep things going with a weaker yen, with low yields. So the fact that the JGB yield has gone up in the last couple of days is fairly significant. The JGB yield was up considerably. They talk about 11 basis points. I've got it as up 7 on Bloomberg. And that's a big move, considering that JGB yield has been trading between 0 and 10 basis points. So right now, today, the JGB yield is at 13 basis points, which is the highest this year. And you look at the charts, the JGB yield, the last time we've seen yields at this level was the beginning of 2017. And you can see how important that is. The dollar yen as well has appreciated lately. That's been a good thing for the carry trade, and it still looks fairly positive. But if JGB yields keep going higher, this could put the spanner in the works, could affect market globally. Why globally? Well, because the Japanese government bond market is the second biggest bond market after the US. The Japanese yen is convertible. It's traded in London, New York, everywhere around the world. And people use the yen as a funding mechanism. But if the yen turns around, starts going up against the dollar, against other currencies, it will wreck. And interest rates in Japan start going up as well. It will force speculators and investors to first close out their long trades in other currencies, and second, it's going to force them to buy back the yen to close out their borrowing in yen. So it's a dangerous thing. And the other thing you have to think about is leverage. A lot of these people use leverage to do this. They use money they don't have. So that could be something to really keep an eye on, and it could get the ball rolling in terms of financial uncertainty, market uncertainty, and it could wake up the bear, so to speak, and bring a bit of life to the summer doldrums of the market. As of now, the dollar still seems fairly steady. It's even up a little bit against the Japanese yen, but the JGB yield is not a good signal here. It looks like maybe the Bank of Japan might be losing control of this market. We'll have to see. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. And you can also follow me on Steemit, DTube, and on Twitter. If you like to support the channel as well, so there's some links below in the description. I have a Monaco 64 store as well with some Billy merchandise. Talk to you later. Take care. Bye.